Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing language of corporate finance. And today we have a doozy of a report, a 10Q from FibroBiologics Incorporated. It looks like things are. Well, interesting. Stick around as we unpack their latest financial rollercoaster. Before we dive in, if getting direct insights stripped from dense financial documents is your jam, hit that subscribe button. Oh, and we have a super chill Discord community. You'll find the link in the description below if you want to chat with us and other like-minded folks. Alright, let's jump straight into the numbers, starting with their balance sheet as of the 30th of September of 2025. Imagine a snapshot of the company's financial health right at that moment. Now, companies, they have assets, things they own, and liabilities, things they owe. FibroBiologics Inc., as of the 30th of September 2025, had total assets of about $8.7 million and total liabilities of about $8.6 million. That means they had very little wiggle room between what they owned and what they owed. Now compare this to the 31st of December of 2024, when they had about $16.4 million in assets and a much larger $13.7 million in liabilities, which is a bit better but still tight. And that cash situation, they're holding on to cash and easily convertible assets that can be turned into cash fast, that is called cash and cash equivalents. As of the 30th of September 2025, this amount was about $4.8 million, a significant drop from the 31st of December of 2024 when it was nearly $14 million. So they are burning through their cash pretty quickly. Now let's flip over to their statement of operations. This shows how profitable the company was over a period of time. For the 3 months ending the 30th of September 2025, they had a net loss of almost $5.8 million. That is a lot of money lost in just 3 months. Now look at the same period in 2024 and the loss was much smaller at only $500,000. That is a nearly tenfold increase in losses. For the 9-month period, they lost about $15.4 million in 2025 compared to about $8 million in 2024. This trend of increasing losses is definitely something to watch. And where is all this money going? A big chunk is going into research and development, R&D for the 9 months ended the 30th of September 2025. They spent about $6.6 million on R&D. That is more than double the $3.1 million they spent in the same period in 2024. This company is heavily invested in developing new therapies. They also have general administrative and other expenses, which includes things like salaries for non-research staff, marketing, and other operational costs. For the 9 months ended the 30th of September 2025, these expenses were about $7.4 million, up from $6.8 million in 2024. So their overhead is also growing. Here is a really interesting line item though, change in fair value of warrant liability. In 2024, for the 9 months ending the 30th of September, they had a gain of over $4.3 million from this liability. But in 2025, for the same period, that change was zero. This suggests that certain financial instruments that were favorable to the company in 2024 have either expired or no longer provide a benefit. Warrants are basically options to buy stock at a certain price, and if the stock price goes up, the value of these warrants increases, and that can be a gain for the company. The absence of this gain in 2025 is a significant shift. Another big one is the change in fair value of their convertible debt. This is debt that can be turned into stock. In the 9 months ending the 30th of September 2025, they reported a loss of nearly $1 million related to this. This means the fair value of this debt went down for the company, which could be due to various market factors or the debt itself being adjusted. Looking at the cash flow statement, now this tells us how much cash the company is actually spending or bringing in from its core operations. For the 9 months ended the 30th of September 2025, they used up nearly $13.2 million in operating activities. That's a significant increase from the nearly $8.8 million used in the same period in 2024. This confirms they are spending a lot of cash and very quickly. Now, where's that cash coming from? Financing activities are things like selling stock or borrowing money. For the 9 months ending the 30th of September 2025, they had about $4.4 million from financing activities. This is down from about $7.6 million in 2024. This decrease suggests they are not raising as much money from financing as they were before. And this brings us to a very important statement that you see in a lot of these reports when things are looking dicey. The company states that there is substantial doubt about their ability to continue as a going concern. This is a big red flag. It means that based on their current financial situation, they might not be able to operate for the next year. They are heavily reliant on raising more money through selling stock or debt. If they can't secure that funding, it could severely impact their operations and your investment. The company is also facing significant challenges in manufacturing their products. They mentioned delays in their planned clinical trial for CLUC 628 because of issues with manufacturing training runs and confirming sterility. This is critical because cell therapy manufacturing is incredibly complex and mistakes can be costly and time-consuming. They depend heavily on third-party manufacturers, and any problems with those partnerships directly impact their progress and ability to get treatments to patients. They also point out the variability of donor cell material, which can cause unpredictable issues in production. On top of all this, there is a very real risk that their common stock could be delisted from the Nasdaq capital market. They are not meeting certain requirements like the minimum bid price and market value of listed securities. They have been given time to fix these issues, but there is no guarantee they will succeed. Delisting would make it much harder for people to buy and sell their stock and could significantly harm its value. So what is my take on FibroBiologics Incorporated's current situation? Well, the company is pouring money into research and development, which is good for a biotech firm with promising therapies. However, the increasing losses, the shrinking cash reserves, and the serious going concern warning are major red flags. They are clearly in a critical phase where securing substantial financing is paramount. The manufacturing and Nasdaq listing issues add even more layers of risk. It seems like they're racing against time to get their treatments approved and generate revenue before their cash runs dry. That is our breakdown of FibroBiologics' latest filing. What is your take on these numbers and what they signal for the company's future? Let us know in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.